traders. Manny Cabrera from MDC Trading Academy with our pre-market forecast and weekly review for today, Friday, May the 24th. Quickly jump at our news items. Remember, early in the week, we talked about a very light week in reference to news. Today is no different. We have news at 8:30, core durable goods. That's happening at 8:30 this morning. Doesn't impact us in any way during our trading session. Let's quickly jump to our analysis here. We go to our daily chart. This is where we always start. Mixed market since when? Since May 9th, since the beginning of this month. Every session has been within the realms of this circle here. Market came off the all-time highs, found support here at previous resistance, ran off there, found resistance at the 20 SMA, tried to recover, hit the 20. Now we're below the 20. Very critical price area here. This price level at 2802.25. Next support area the market wants to go lower is obviously the 200 SMA. Now here's the key, guys. If the 200 SMA holds and we can break above the 80 again, I think we'll be okay. Otherwise, we expect a long, protracted run to the downside, potentially down to this area here at between 2604 and 2612, right around here. This is where the market potentially go to. And of course, there's got to be a lot of acceleration in price because that's typically how it runs. You see how the market just picks up speed, wide ranges, moves quickly. Look at these record volumes here towards the end of the year last year, over almost 3 million contracts. So that's what we're looking at right now. Now, regarding the technical aspect of the market still has support. We still have left several areas of support. So we're expecting the market to find support and continue to the upside. That's the actual long-term play. But on a short-term basis, the market can potentially break this area, move lower before it starts to move higher. So you got to keep your eyes on that one. To us, irrelevant and immaterial, whether it's up or down, as long as we have volume and movement, which of course we have. 1.3 million is our average volume, and an HR over 36. Let's look closely at our analysis, our projection chart here. Our projection chart, you can see here, the market has been coming off the all-time highs. It's continued the steady decline, but not a steep decline. It goes up, it goes down, it goes up, it goes down. It's kind of like the selling pressure, the buying pressure doesn't wane. It goes down, it comes up, it goes down, it goes up. We had several days this week where we started, the last couple of weeks, where we started on a downside, started down, ended up, started up, ended up down. That just goes to show you that there's a lot of pressure within this area. Market is coming down, hitting potential areas where we expected, finding resistance in a previously discovered area. So what we're expecting is market to if it cannot penetrate through this particular resistance area, you'll see it closer in the other chart, where if it penetrates, we're expecting a run to this area here. If it doesn't, we have a lot of support here to these areas down here. You can see a little bit more clearly here in our analysis chart. As you can see, the market has great support to the upside here. It's broken over yesterday's intraday high. It's finding support at yesterday's market high. If the market holds above this line here, we're expecting the market to continue to the upside. Otherwise, the breakdown is going to be swift, and it's going to have a lot of potential support in a lot of key areas here on the way down. So keep your eyes open for these areas if the market breaks down, because ultimately, if the market does break down, the intended target is going to be down here. It may not do it immediately, but ultimately, I think that's the goal. It was to retest. Otherwise, like it's doing right now, if the market can break through here, the market can come and retest this area here before it attempts. There's going to have quick resistance, and it may kind of oscillate there for a while before it makes up its mind either to go straight up and come retest up here, and or break down and come retest these lower areas and ultimately try to come down here. Now let me just do a quick Fibonacci from this particular low to the current intraday high, which is the pre-market high. There's your 38. There's your 50. And there's your 61. So anywhere above these lines, we can still expect a little bit of run. But ultimately, this is the key line right here. Let's see what happens when the market reaches those areas. Let's go to our trade chart. And again, there you see it again. There's our support. There's the market breaking through the intraday high. Here's our key support. And ultimately, if the market breaks this support, we're expecting the market to ultimately come and retest this here. It's not going to be a pretty thing. You're going to get a lot of these runs. It's going to right to the upside, then it's going to take one of these and one of those, and it's going to consolidate for a bit and then fool you to the upside, and then it's going to fail and come down, and eventually it's going to try to retest this area. That's if it breaks here with a lot of volume and strength. If it holds, you're going to find a lot of consolidation between these areas and eventually either break up with strength or break down to the downside. So keep your eyes open for both sides. Don't fall in love with either side until you see decisive evidence. Have a great trading session and have a great weekend. Ciao.